Good people, how is everybody? Hoping everybody is doing good, everybody is doing great. It's on a Monday, and as you can see from my chart, everything is good. Everything is amazing, and another opportunity that we've gotten to learn. So as you can see from my trades, we have two trades. The two trades, as you can see, both S health have been hit, and I want to talk about today. I want to talk on how I did read this price, and how did this trade react, and what happened at the end of the day, what I did learn most importantly. So without any further talking, let's get cracking, and let's see what happened today. So over here you can see my first trade, but before I start, I would like to request that you may like this video and please subscribe to this channel so that we may get better all day every day, right? Yeah, so over here I want us to see and see how I did interpret price today. I had three trades, one on CAD JPY and two on Swiss franc JPY, but the two trades were losses, and yeah, I did manage my risk properly. I'll be talking about it, so let's get cracking. I don't want this video to take that much long. So yeah, so I start from the higher time frame. From the, probably, did I see something from the daily? The daily, I didn't see something, so I dropped lower to the 4-hour time frame. And what I did see over here, we had this fair value gap that hadn't been tapped into yet. Over here we have this 4-hour fair value gap that hadn't been tapped in yet. We saw on Friday the market rally lower, then on Sunday market rallied higher, closed. Here we can see we have a daily inversion fair value gap. Let me show you the daily inversion fair value gap. From these candles are low over here to these candles high, you can see this fair value gap over here. That was my daily fair value gap. That was also paired with this 4-hour fair value gap from these candles high and this candles low. We have this gap there, so we have a daily fair value gap, or inversion fair value gap, and also for our inversion fair value gap. Why did I label them as an inversion fair value gap? So what I saw is I'd seen this candle close above the consequent encroachment of these this daily and 4-hour inversion fair value gap. So these gave me a confluence that we will retrace higher, and the movement higher, I wanted to catch a 1 to 2, and of course maybe something that was to drive the market higher. We have this liquidity here, so yeah, so once I'd seen these, I wanted to catch a 1 to 2 from these movement higher. So after I'd seen that, I dropped to a lower time frame to see whether we have anything else or confluences that we might be going higher. So we had this 3-hour order block that the market had already, by 2 a.m. during London, had already closed. By the way, I do like to look for my trades after London has already closed towards New York, right? That's where I want to read what price is wanting to do. I might enter during before London, but I give room for my trades in case I go to drawdown. There are key levels I'll be watching that I don't want the market to go past. So we had this 4-hour also fair value gap here. From these candles high to these candles low, we have this daily for our fair value gap. But since this market had closed above it, I didn't expect to see it being tapped into then the market rally. I wanted to see the market rally higher, and that's what happened until during New York, after the around 11, that's when the market reversed to these, heading to these 4-hour fair value gap, since it's on Monday. Yeah, but something else I'm refining every day. So my entry, so I'd seen this candle. I think I was watching this candle, and what I saw is I closed above the 3-hour order block. So we have this order block. It was a bearish order block, and that was preventing prices higher, but over here it was violated. Now it became a mitigation block. So I saw the reaction inside these if I extend my something like that. So from the high, from the open to the close of this candle, and maybe make it, you can see there. So this is my mitigation block. I guess you can see the brown area from the open of this candle to the close. So I saw this up and down movement, and this candle had rallied higher, closing higher. So I dropped lower to the 1-hour time frame, and what I saw is you can see this reaction of these. Let me darken these so that we may have a clear picture. So over here, see the reaction of the consequent encroachment of this 3-hour order block. We also have a fair value gap inside this, but I didn't want to see it being tapped into. I wanted to see this rally higher, and you can see how the candles were telling the story. Candles were respecting the midpoint of this 3-hour order block, a rally. We have a drop down, then we had this sharp retracement higher. So after I'd seen these at around 3 a.m. So now I wanted to see a movement higher, and that's when I dropped to the lower time frame, and we had these 30 minutes fair value gap over here. So I've seen this candle respecting these 30 minutes inversion fair value gap. You can see the candles were closing above the fair value gap. The wicks were doing the damage. I saw these this order block had already been formed at around 5. So afterwards my entry was around this 15 minutes after I'd seen the close these candles, this candle close above these order blocks. So I entered my trade along this candle. Let me drop to the lower time frame. So once I'd seen this price action here, so I did enter my trade around this level, but was it really that level? Yeah, I'd seen a fair value gap, a slight fair value gap here, a candle close above it. I'd seen a candle respect the an order block being formed. So to me, I wanted to see this order block to support price. But what happened during New York, the market rallied lower back to the 30 minutes fair value gap during New York, during the start of New York. Then we can see this rally higher towards our TP, but at around this 1 to 1 to 5, I took my partials, and I said this in the Ion FX Telegram. I've taken my partials. Now I'm letting the trade to run, but it reversed against me, and you can see at around this level it took me out. So that was my first trade. I was taken out, but because I've taken a partial, meaning my loss was cut into half, right? So I only lost a half of what I was risking, right? So yeah, I lost a half of what I was risking, since I'd seen the market rally lower and going back to the 15 minutes time frame as I was observing. So I saw this reaction of these 30 minutes fair value gap, and I retraced back to the higher time frames, maybe the 4-hour. So what I saw is I saw this fair value gap inside here from this candle's high, have these candles high and these candles low. So to me, I wanted to see this reaction of this key level here to rally higher. By the way, I didn't observe. Let me get rid of this 3-hour order block. I wasn't that concerned with these 4-hour fair value gap, because this 4-hour inversion fair value gap was to support prices higher. So with this one, I wanted to say maybe the market tap into it and then rally higher. So going back to the 15 minutes, that's what I had thought. And you can see here the market had tapped into the 4-hour inversion fair value gap. You can see how these candles were respecting this 30 minutes fair value gap, rallied higher. So to me, this was now the reversal, and I guess this a revenge trade, or was this something I had not. It wasn't a revenge trade, because I'd seen my trade idea was valid, and with the price action was supporting me, a retracement down to the 4-hour inversion fair value gap. You can see the candles were respecting this 30 minutes inversion fair value gap, and you can see the reaction off. So I decided to take that trade, and I was observing this order block. I also saw the market was kind of respecting it. I didn't want to see a closure below, so I let it run, but it also immediately reversed on me and choked me out. So I don't think it was a revenge trade for me. It was maybe some sort of my trading plan was in play, but I wasn't also keen, or I despised these 4-hour fair value gap, right? So something else I should be taking note of. So that was my first trade, having to take 2 losses, which to me were good losses and well managed losses, because I lost half of the risk. Whatever I was risking, I lost half of it, and over here I was risking less than 0.25 of my account. So yeah, but after all, it's a loss, but a well managed loss. All right, so that's my first trade. And going back to CAD JPY, I don't know how the market played out over here. All right. All right, so you can see over here my TP was hit on tick, then we had a reversal. We had this reversal downwards. So that's why sometimes, like, my 1 to 2 is for in case someone maybe was targeting a 1 to 3. You see, they couldn't have got that trade, but over here you can see the market tapped into my TP on tick, then reversed, but I had already secured my profit, so no problem with the reversal. And I'll be explaining why I wanted to see these orange dotted line to be tabbed into. So let's get cracking with this. So from the higher time frames, what I did see is so let's go to the daily time frame. Hopefully I will walk you through so that we may see everything clearly. So I started with my weekly time frame, and what I noticed is we had this long week, right, from last week. So I did use my tool to determine the consequent encroachment of that week, and you can see there my consequent encroachment. The midpoint of this week is what I did label in orange dotted line, this one. I guess you can see that. So to me today, I wanted to see the consequent encroachment of that week being tapped to. So I dropped lower from the 1 hour time frame. What I did see previously from the weekly, you can see over here we have this weekly order block that had been traded into, then we reversed lower, then we had this candle closed below the low or below the midpoint of this fair value gap. It's a daily fair value gap. Yeah, you can see the candle had closed below the consequent encroachment or the midpoint of that daily fair value gap. But going down to the lower time frame, I saw some bullish despite the candles closing below, and meaning that I should be bearish, but the price action in the lower time frame dedicated why I was bullish for today, right? So I'd seen Friday traded lower, then on Sunday we can see this fair value gap, sorry, this 4-hour fair value gap from these candles low to these candles high, it had been disrespected. And also we had this candle closure above this 4-hour inversion fair value gap. Let me make everything visible. Yeah, so we can see we had a closure above this 4-hour inversion fair value gap, and these at around 1 a.m. today. So after I'd seen that, gave me a confidence that we might be going higher. So I dropped lower to the 2-hour time frame. That's when I spotted these fair value gap, and around this zone, I was watching the price action, because from this candle we had, you can see this up and down movement of price, meaning over here price to break it take long, and everything here is balanced to this level where we have a slight imbalance, and also this level. So around these key levels of mine, this 4-hour inversion fair value gap and also this 2-hour inversion fair value gap, I saw that everything was balanced, right? So I dropped lower to the 1-minute time frame, and over here what I did spot, we have these closure outside the 2-hour inversion fair value gap and also outside the 4-hour fair value gap, right around 4. So I dropped lower to the lower time frames for my entry as I was watching prices. So my entry, by the way, was triggered earlier. Over here we had I was watching these fair value gap here, then this drop lower to this level tapped me into my trade. Then I saw this movement higher, then a retracement lower. Was watching it because I had my key level, so I wasn't that panicking, and I knew my stop loss was safe. So but I had confidence in this trade, so the market rallied lower. I was in profit. My profits were now going lower. Tapped into the key level at my entry. Then we can see these sharp retracements. These rally higher tapped me out of the trade, and then we can see now the retracement lower. So those were my two trades, and for the first trade everything was well managed, and I got the trade out earlier at around 7 a.m. so the trade was good. Then I was watching on the Swiss franc Japanese yen, which I then managed. Sorry for that, guys. Which I then managed and then left, but later on came and got these. But to me everything was good, and opportunity to learn that after maybe 11 a.m. I shouldn't place any trade. I should let maybe a loss, despite if I'm seeing like my trade idea is playing now, because afterwards we may see consolidation. Most of the time we see a consolidation with this retracement to the key levels, then maybe the other day will continue higher. So maybe after 11 is something I should be considering not to take a trade. But those were my lessons, and The good thing is we have an improvement of on how I can manage my trade and also manage my risk, but I'm getting better all day every day. So let's keep getting better all day every day together as a group. So that is it for today. That was my trade review. Thank you for being around. Thank you for watching this video. Until next time, be safe. Bye bye.